Welcome back to Explain the Charts. Today, we're going to be diving deep into the S&P 500, specifically the SPY ETF, and analyzing what the news and charts are telling us about its future movement. The S&P 500 is a broad market index that tracks the performance of 500 large-cap U.S. stocks, so it's a good representation of the overall health of the U.S. stock market. Let's start by looking at the latest headlines and economic events. Recent Google search results show a mixed bag of news, with some sources indicating a strong earnings season and others highlighting concerns about the strong dollar and potential volatility. These conflicting viewpoints suggest that the market may be in a period of indecision, which is something we'll explore in more detail when we look at the charts. Now, let's turn our attention to the daily chart for SPY. Looking at the last few weeks of price action, we see a clear trend of upward momentum, with the price making higher highs and higher lows. This bullish trend is confirmed by the recent breakout above the previous resistance level around 580, suggesting that the market is still in a strong bullish sentiment. However, it's important to note that the bullish trend has slowed somewhat in recent days, with the price experiencing a slight pullback from the recent highs. This suggests that the market may be taking a breather before continuing its upward journey, but we'll need to monitor the price action closely to confirm this. If we zoom in on the daily chart and look at the last 5 trading days, we see a range-bound pattern. The price has been fluctuating between 578 and 583, suggesting that the bulls and bears are currently locked in a battle. The lack of clear direction during this period could be attributed to the uncertainty stemming from the news, as we discussed earlier. The break above 583 would signal a continuation of the bullish trend, while a break below 578 would suggest a possible reversal and a shift in momentum. Switching gears to the hourly chart, we see that the price action over the past few hours has been much more volatile. We can see a series of rapid swings in both directions, reflecting the heightened uncertainty in the market. This choppy trading could be driven by traders reacting to the latest news and earnings reports, as well as the upcoming election. One thing to watch out for on the hourly chart is the support level around 579.50. If the price drops below this level, it could signal a further pullback and potentially a trend reversal. On the other hand, a break above the resistance level around 581.50 would indicate a continuation of the bullish momentum. Lastly, let's take a look at the 15-minute chart to see the most immediate price action. The 15-minute chart shows a similar pattern of choppy trading, with the price fluctuating within a narrow range. This volatility suggests that traders are actively trying to anticipate the next move in the market, but the overall direction is still unclear. Looking at the last 15 minutes of candles, we can see that the price is consolidating just below the resistance level around 582.50. If the price breaks above this level, it could trigger a short-term bullish surge. However, a break below the support level around 582 would likely lead to a short-term pullback. Therefore, traders should be cautious about taking any large positions at this time, as the market is still in a state of flux. To recap, the news surrounding SPY is mixed, with conflicting reports on economic growth, inflation, and the potential impact of the election. Looking at the charts, the daily chart suggests a bullish trend, but recent price action indicates that the market may be taking a breather before continuing its upward journey. The hourly chart highlights a high degree of volatility, with the price bouncing between support and resistance levels around 579.50 and 581.50, respectively. The 15-minute chart shows consolidation just below the resistance level around 582.50, suggesting that the market is currently in a state of indecision. Therefore, traders should be cautious about taking any large positions at this time and closely monitor the price action for signs of breakout or breakdown. Key price levels to watch include the support level at 579.50 on the hourly chart and the resistance level at 582.50 on the 15-minute chart. A break above 582.50 on the 15-minute chart would likely trigger a short-term bullish surge, while a break below 579.50 on the hourly chart could signal a further pullback and potentially a trend reversal. The market's direction will likely be influenced by the upcoming election, the release of key economic data, and the continued flow of earnings reports. Traders should stay informed about the latest news and events and be prepared to adjust their trading strategies accordingly.